Turning 65 is a significant milestone, usually coinciding with the eligibility for Medicare, which is the federal health insurance program for older adults and certain younger individuals with disabilities. But understanding the specific timelines and rules for enrolling in Medicare Parts A, hospital insurance, and Part B, medical insurance, is crucial because timely enrollment ensures necessary health coverage and helps avoid potential costly and lifelong penalties. So in this video, I'm going to provide a detailed overview on what you should be expecting or what you should look for and what you need to know in terms of enrolling in Medicare if you're about to turn 65. Now, the most critical time for a person to enroll in Medicare is during their initial enrollment period, or IEP. This is a specific 7-month time frame centered around an individual's 65th birthday. The IEP begins 3 months before the month an individual turns 65, includes the month of their 65th birthday, and ends 3 months after their birthday month. For example, if an individual's 65th birthday is in June, their IEP runs from March 1st through September 30th. And the date that Medicare coverage starts is directly tied to when an individual enrolls inside of their IEP. So enrolling in the 1 to 3 months before the 65th birthday month ensures that coverage starts on the first day of the birthday month. However, if enrollment occurs during the birthday month or in the 1 to 3 months after the birthday month, coverage will be delayed starting on the first day of the month following enrollment. Now, this timing structure highlights the importance of proactive enrollment. Analysis of these rules reveals that only by enrolling prior to the birthday month can an individual guarantee coverage beginning precisely when they turn 65, assuming a birthday that is not on the first of the month, which means if your birthday is on the second or anywhere thereafter, you're fine. But waiting until the birthday month or later inevitably leads to a delay of at least 1 month in coverage commencement. And such a delay can create an unexpected gap in healthcare insurance if other coverage, like an employer plan, terminates exactly at age 65. Therefore, completing Medicare enrollment in the 1 to 3 months preceding the 65th birthday month is advisable for a seamless transition. Now, there are some special rules that apply in certain situations. For individuals whose birthday falls on the first day of the month, for them, both the eligibility month and the entire IEP shift 1 month earlier. For instance, someone born on June 1st becomes eligible for Medicare starting May 1st, and their IEP runs from February 1st through August 31st. If they enroll early, that is to say in the 1 to 4 months before their birthday month, their coverage can start on the first day of the month before their birthday month. The following table or the following graphic will show a summarization in terms of the relationship between the IEP enrollment timing and coverage start date. So again, 1 to 3 months before your 65th birthday month, your Medicare Part A and B coverage starts on the first day of your birthday month. If you decide to enroll during your 65th birthday month, your Medicare coverage Part A and B will start on the first day of the month after you sign up. And if you decide to enroll 1 to 3 months after your 65th birthday, that will then have your Medicare Part A and B coverage start the first day of the month after, again, you sign up. And again, as a special note here, if your birthday is on the first of the month, your IEP and eligibility start 1 month earlier. So enrolling 1 to 4 months before your birthday month means that coverage starts the first day of the month before your birthday month. So let's switch gears for a second and talk about some automatic enrollment situations for Social Security beneficiaries. So many individuals do not need to actively apply for Parts A and B, and that is those who are already enjoying Social Security retirement benefits or from the Railroad Retirement Board, assuming that they enjoyed these benefits 4 months prior to their 65th birthday, are typically enrolled automatically. These individuals should receive a Welcome to Medicare packet, including their red, white, and blue card, in the mail approximately 3 months before their 65th birthday. While automatic enrollment does cover Parts A and B, beneficiaries still need to make active decisions regarding Medicare Part D, which is your prescription drug coverage, and supplemental insurance options like Medigap or Medicare Advantage plans. If, however, you decide to continue to work after your 65th birthday, there are some considerations that you need to take in mind. Continuing to work past your 65th birthday or age 65 while covered by an employer group plan introduces specific considerations for Medicare enrollment, particularly concerning Part B. Now, again, if you decided to work after your 65th birthday, Medicare Part A will cover inpatient hospital stays, skilled nursing facility care, hospice, and some home health care. And this is often premium free for individuals or their spouses who have worked and paid Medicare taxes for at least 10 years, which is 40 quarters. For those eligible for premium-free Part A, enrollment is generally recommended during the IEP, even if still working and covered by a group health plan. And since it typically incurs no monthly cost, enrolling in Part A provides supplemental hospital coverage that coordinates with the employer plan. However, a critical exception exists for individuals contributing to a health savings account. Enrolling in any part of Medicare, including premium-free Part A, terminates eligibility to make further contributions to an HSA. This conflict requires careful planning, which I will talk about later in the video. Continuing with the working after 65 situation, Medicare Part B enrollment again has some special decisions that you need to take in mind, because Part B covers medically necessary doctor services, outpatient care, medical supplies, and preventative services. And unlike Part A, Part B does require a monthly premium, the amount of which is typically based on the beneficiary's income from the past 2 years. The decision of whether to enroll in Part B during the IEP while still working hinges primarily on the size of the employer providing the group health plan and the resulting coordination of benefits rules. Something also to keep in mind is that the interaction between Medicare and a group health plan is governed by Medicare secondary payer rules, which dictate which insurer pays claims first. Employer size in this scenario is the key determinant. For a larger employer, 20 employees or more, calculated based on the total number of employees across the entire company, including full-time and part-time, for 20 or more calendar weeks in the current or preceding year, the group health plan is the primary payer and Medicare is the secondary payer. In this situation, an individual covered by the group health plan through their own or their spouse's current employment can generally delay enrolling in Part B, going beyond their initial enrollment period or IEP, without facing a late enrollment penalty. But that is so long as they maintain the group health plan. For a smaller employer with fewer than 20 employees, Medicare is the primary payer and the group health plan is the secondary payer. So individuals in this scenario typically must enroll in Medicare Part B during their IEP. Come closer here. Failure to do so means Medicare as the primary payer will not pay its share, and the secondary group health plan may also refuse to pay for services that Part B would have covered, potentially leaving you, the individual, responsible for the majority of the costs despite having employer insurance. The determination of primary versus secondary payer status based on employer size is the fundamental thing to understand here. While the ability to delay Part B enrollment without penalty via a special enrollment period that we will discuss next is technically available regardless of employer size, if continuous group health plan coverage exists, the practical necessity of enrolling in Part B differs dramatically. Delaying Part B when working for a small employer, less than 20 employees, is financially perilous because Medicare should be paying first. Thus, while the 20 plus employees threshold primarily dictates whether delaying Part B is feasible without immediate coverage gaps, the underlying requirement for those with small employer coverage is effectively to enroll in Part B at 65. So it is imperative for those working past 65 to confirm with their employer's HR department or Benefits Department, how their specific plan coordinates with Part B, and whether Part B enrollment is necessary at age 65 to avoid coverage issues and unexpected costs. Now, for that special enrollment period that we talked about just a few moments ago, for those who validly delay Part B enrollment past their IEP because they maintain group health plan coverage based on their own or spouse's current employment, typically with an employer that has 20 plus employees, Medicare provides a special enrollment period, otherwise known as SEP, to enroll later without penalty. That said, that does have a specific window, and this window lasts for 8 months. It begins the month after the employment ends or the month after the group health plan coverage based on the current employment ends, whichever event occurs first. But current employment is the key factor here. Therefore, having COBRA coverage or retiree insurance does not qualify an individual for an SEP, nor does it extend the 8th month window after active employment or coverage ceases. The SEP clock starts ticking immediately upon the termination of active work or the associated group health plan coverage. Relying on COBRA or retiree coverage to postpone Part B enrollment beyond the 8th month window will likely result in enrollment penalties and coverage gaps. To avoid gaps in coverage, individuals should plan to enroll in Part B during the SEP about a month or two before their enrollment or group health plan coverage actually ends. Medicare coverage enrolled via the SEP typically begins the first day of the month after the Social Security Administration processes the completed application form. And speaking of forms, enrolling during this Part B SEP requires submitting specific forms to the Social Security Administration office to prove eligibility and prior coverage. And those forms include Form CMS 40B, the application for enrollment in Medicare, Part B, which is the actual application for Part B coverage. Then there's Form CMS L 564, request for employment information. This form verifies the group health plan coverage based on current employment. So you, the individual, would complete Section A and the employer must complete Section B, confirming coverage dates and enrollment period. Both forms must be submitted together. Both forms need to be submitted together to the SSA. Now, we spoke about this a little bit earlier, but it's paramount that we talk about it specifically in more detail, and that's health savings accounts and Medicare enrollment in terms of the critical period that you have and what you can do about it, or how they conflict between each other. So a health savings account, HSAs, offer tax advantages for saving and paying for healthcare expenses, but eligibility is strictly tied to enrollment in a qualified high deductible health plan and having no other disqualifying healthcare coverage. And enrolling in any part of Medicare, including premium-free Part A, constitutes disqualifying coverage and immediately ends an individual's eligibility to make further contributions to an HSA. And a significant complication arises with Medicare Part A's retroactive coverage rules. When an individual applies for Medicare Part A or applies for Social Security retirement benefits, which automatically triggers Part A enrollment if eligible, the Part A coverage effective date can be backdated up to 6 months prior to the application month, though not earlier than the first month of Medicare eligibility, typically the month of the 65th birthday. This retroactivity creates a potential tax trap for those contributing to an HSA while delaying Medicare. If Part A coverage is backdated 6 months, any HSA contributions made during the 6-month retroactive period are considered excess contributions. These excess contributions are subject to IRS tax penalties, potentially including a 6% excess tax for each year the excess amounts remain in the account. So for some simple math, if you had $1,000 in your HSA account, you could be charged $60 in excess tax for each year that amount remained. Now, to avoid these tax penalties, individuals with HSAs must cease all contributions, both employee and employer contributions, at least 6 months before applying for any part of Medicare or applying for Social Security retirement benefits. The annual HSA contribution limit should be prorated for the year based on the number of months the individual was eligible before stopping contributions. So it is important to note that while contributions must stop, funds already accumulated in the HSA can be still withdrawn tax-free after Medicare enrollment to pay for qualified medical expenses, including Medicare premiums, except Medigap, deductibles, and copays. Furthermore, because applying for Social Security benefits triggers automatic Part A enrollment for those eligible, individuals wishing to continue HSA contributions past age 65 while working must also delay applying for Social Security retirement benefits. The decision about continuing HSA contributions is therefore closely linked to claiming Social Security. Now, if you missed your initial enrollment period, there is another special enrollment period called the General Enrollment Period, or otherwise known as GEP. For individuals who missed their IEP or do not qualify for an SEP, the General Enrollment Period offers another chance to sign up for Medicare Part A and or Part B, and this period starts on January 1st and ends on March 31st. Your coverage start date if enrolling during a GEP becomes effective the first day of the month following the month of enrollment. For example, enrolling in February means coverage starts March 1st. This is a change from prior years when coverage began on July 1st. Now, everything isn't just a bed of roses. There are some penalties for enrolling inside of a GEP. Enrolling via the GEP typically means the individual will be subject to late enrollment penalties for Part B and potentially premium for Part A because they did not enroll during the initial IEP and lacked qualifying for SEP. Now, if you're turning 65 between January 1st and March 31st, that's a different story. But the GEP does serve as a safety net, but again, comes with some consequences, like the potential for lifelong penalties. Okay, so now if you're still with me, let's talk about how to avoid some late enrollment penalties. Avoiding late enrollment penalties is a primary motivator for some to enroll inside of Medicare Parts A and B early, because these penalties can significantly increase your monthly premiums and also be lifelong for Part B specifically. And speaking of Part B, let's take a specific look at what enrollment penalties for Part B would actually look like. So the late enrollment penalty for Part B is an additional 10% of the standard Part B premium for each full 12-month period that an individual was eligible for Part B but did not enroll and did not have a qualifying group health plan coverage based on current employment. For example, delaying enrollment for 2 full years, 24 months, would result in a 20% penalty, 2 times 10%, and this penalty amount is calculated based on the standard Part B premium for the current year. For an example, $185 in 2025 then gets added to the individual's actual monthly premium, which might be higher due to income adjustment. And like I've said throughout this entire video, this penalty is usually paid as long as the individual has Medicare Part B, which again is typically for life. And there is currently no cap for Part B's penalty. But to avoid this penalty, the primary way to avoid it is by enrolling during your IEP or inside of a qualifying special enrollment period or SEP. Having group health plan coverage based on current employment allows for penalty-free delay and subsequent enrollment via an SEP. So the one thing that we haven't talked about extensively here is Part D, your prescription drug coverage, and the penalty that comes with that. So yes, there is a late enrollment penalty for Part D if you decide to forego enrolling in your IEP. And it is calculated as 1% of the national base beneficiary premium, an amount set annually, for example, $36.75 for 2025, multiplied by the number of full months the individual went without Part D or other credible prescription drug coverage after their IEP ended. And credible coverage means the other drug plan is expected to pay on average at least as much as Medicare standard prescription drug coverage. This penalty, much like Part D's penalty, is added as a monthly increase on your monthly premium and lasts as long as the individual holds the Medicare Part D coverage. And again, to avoid the Part D penalty, It's easier to just enroll inside of your IEP, or if you have a qualifying SEP, enroll then and you don't have to worry about it. The structure of these penalties increasing by the delay that you actually delay in enrolling inside of Medicare and the lasting for the duration of coverage underscores the significant long-term financial impact of missing an enrollment period. So with all that said, now, how do you actually go about enrolling inside of a Medicare Part A and B coverage plan? The Social Security Administration, SSA, is responsible for processing applications for Original Medicare, which includes Part A and B. And individuals not automatically enrolled have several ways to apply. It's usually faster to apply online so that you can get your Part A and B mailed to you in a timely fashion. It may require creating a profile and then logging into your Social Security account, but if you need to, you can save your application and then return back to it later. You can also do this by contacting the SSA office at 1-800-772-1213. And if you prefer to do this all in person, you can head down to your local SSA office and fill out the paperwork in person. So, to wrap everything up in a tight, somewhat knit bow, let's take a look at some key takeaways that you should keep in mind as you go into, if you're turning 65 soon, into your IEP. Some key things to keep in mind to successfully navigate Medicare enrollment when turning 65 requires understanding key timelines and rules to ensure continuous coverage and avoid penalties. So keep these 5 things in mind as you head up to that period. Make sure to prioritize your initial enrollment period, your IEP, which again has a 7-month window around your 65th birthday, 3 months before your actual birthday month and 3 months after. If you plan on working past 65, be sure to assess that very carefully, because the need to enroll in Part B while working depends on employer size. Less than 20 employees versus 20 plus employees, which dictates primary payer status. Again, if delaying Part B is permissible, again, typically with larger employee numbers, understand that you have an 8-month special enrollment period that you have to abide by. Then also make sure that you manage your HSA contributions, and if you are contributing to an HSA, make sure to stop that 6 months before you send your Social Security application in and start the process for Medicare, Original Medicare Parts A and B. If you do all of the things I just mentioned, you should be good to avoid penalties, which specifically come with Part B and Part D, more than likely if you decide to delay your Medicare enrollment. Then finally, make sure to utilize your resources that you have available to you, like Medicare.gov, your local Social Security Administration office, and your agent, so that you have adequate information at your fingertips whenever you need it. Planning ahead for this event keeps you hedged from risk that you could potentially incur if you decide to forego enrolling in Medicare. But if you have any questions, feel free to leave those down in the comments. I'd love to answer every single one of them. And if you have reached this point of the video, your secret code here is, what is your favorite flavor of cheesecake? Mine is New York style. Hopefully this serves as a comprehensive guide for enrolling inside of Medicare and when you should actually do so. But again, if you have comments or if you have questions, leave those down in the comment section. If you want to talk about all the options that are available to you, feel free to click the first link in the description to set up a meeting so that we can talk about everything that is available to you and answer any specific questions for your individual needs that you might have. But if you're further curious about everything concerning Part D and the prescriptions, I have a video right over here that answers that in detail. I'll see you over there.